Okay, we are live. How is it going, everybody? How's it going, Roy?
Good. Doing this one from the office. Appreciate you moving up time, and sorry if that throws anybody else off, but we wanted to get our bootleg in. How are you doing?
I'm doing well, man. I have these two lights. You can see it in the reflection of the thing behind me. Like, so one is right there, and then the other one's right there, 1 and 2. And both of them have 4 light bulbs each inside, and they had completely run out. And so I replaced them, and I'm completely blinded now because they're back to full capacity. Other than that, I got my Celsius here, and I'm ready to talk some stocks, man. I'm excited.
Yeah. Sounds good. You're buying Celsius, obviously. Are you buying Celsius the stock?
I'm not buying it yet. I'm not adding to my Celsius position just yet. Again, like my plan is to continue with the miners for right now, and then, if and when Celsius does continue to trade sideways, then probably go into it via leaps, at least to start with. That's the same thing that I'm doing with New, right? I bought New last week because I don't think there's going to be tax loss harvesting on New, but I do think that there's going to be tax loss harvesting on Celsius, and so I want to be a little bit more conservative with that one. But yeah, I want to start off with leaps and then build my share position if my conviction is higher.
Interesting. Yeah, I'm staying away from that one still. So probably will continue to do so. Where do you want to start? Bitcoin?
Yeah, we can start at Bitcoin. I'm going to get a new laptop because mine keeps freezing up and it's just ridiculous. So I definitely have to buy one this week or so. We can start at Bitcoin, man. Bitcoin's been interesting. It went up, it broke through 100, and now it's pulled back again. And currently, Bitcoin is sitting at 97.
Yeah, you could throw up my chart. I've got it up there. So
let's take a look.
But yeah, we got over the $100,000 hump, and we're underneath it. And it shouldn't be shocking that there's a pullback and some consolidation, but it keeps being higher highs. I don't think that the run is over. It's kind of hard to gauge when that will happen, but there's still a lot of interest in crypto as a whole, especially Bitcoin. There are pump and dumps. Bitcoin's not one of those. Why do you think we broke under 100,000?
I mean, 100 is a huge psychological level. So you're going to have a massive amount of people selling at 100, and it's going to trade sideways and chop for a little bit before it, goes even higher than that. And then, there's still I think there's still a long way to go with Bitcoin, not necessarily in terms of do I think it's going to double from here in the near future, but I am with you in saying that the cycle is not, to its peak. If you just look at when other cycles have peaked post halving, it's generally it'll put us somewhere in mid 2025-ish, going by that same standard. Now you could argue that, hey, the cycles have been accelerated a little bit recently because of the institutions and especially nation states. And that's a fair argument to make, but I still don't think it's been accelerated to the point where, we topped at 100 and then nothing's going to happen from here. There's a lot of indicators that are still pointing us in this direction that this thing goes higher. And I'll show you one of them right now. Well, I'll show you 2 of them, actually. So let me throw up my screen. And not that one. It is this one. So here we can see that you have this Christmas effect with Bitcoin. It happened 2016, 2020, and hasn't happened yet in 2024. But end of the year rally, like the Santa Claus rally, is going to likely be strong for Bitcoin as well. Of course, these things, they don't exactly parallel each other, but they rhyme. And then this was the most important one. I even tweeted this out. The balances on the exchanges have dropped to their lowest point ever. And that's exactly what you're going to have with something that has a fixed supply, but it's having now this international demand from nation states, from institutions. MicroStrategy alone owns over 2% of the Bitcoin outstanding, and they're not producing Bitcoin. Like all the miners, combined are not producing Bitcoin at anywhere near the rate it takes to meet the demand that we're having from these large institutions. And so I think that as we go into this administration that is going to be very crypto friendly from all the signs that we've been getting, this number is going to continue to fall more. And what you have when you have a very limited supply, especially a dwindling supply on markets, you're going to have a skyrocketing price. And that's just the reality of supply and demand. And it doesn't matter necessarily that Microsoft doesn't want to add Bitcoin to the balance sheet just yet, or, that Amazon is sort of considering it, but maybe not just yet. All of these things are going to be inevitabilities if this thing plays out the way that many Bitcoin bulls think that it will, because of that limited supply, right? The more awareness that this gets, the more adoption it gets. And as a result, the higher the price goes. It's a virtuous cycle because of that fixed supply.
So why aren't you buying Bitcoin?
Because it's already 20% of my portfolio, and it's going to be kind of reckless for me to continue buying at that pace.
Yeah, no, that makes sense. I actually had lunch with Matt on Monday, and we talked about adding to Bitcoin more aggressively, and I think I need to do that. Like I have some Bitcoin, I have some Bitcoin adjacent stuff, but that's not the same as the actual currency. And as I take some profits on some things in January, part of that probably should just go DCA into Bitcoin. What do you think about this? Throw this tweet up. This was Michael Saylor commenting. Of course, Donald Trump said, "Congratulations, Bitcoiners, 100,000. You're welcome." Maybe he bought it up to that point. I doubt it, though. Together, we will make America great again. Michael Saylor says, "We have a Bitcoin president."
Absolutely.
What do you think about that?
Yeah, I mean, I just yes, Bitcoin, the skeptics will call it a Ponzi. I understand that viewpoint, but the people who are bullish will call it like a secular growth trend. Like it's going to increase regardless of what happens. But are there things that grease the wheels of Bitcoin's rise up? Absolutely. And this is a huge one, right? Like if the US, and we've talked about this in the past, but if the US goes out and they say, hey, we are telegraphing a strategic reserve for Bitcoin, and we're going to make that happen. And if Donald Trump has his own altcoins out there circulating, he's launched NFTs in the past. Like he's very much in that space, and he's saying, "Hey, we want to promote this. We want to make the U.S. a leader in this." Well, guess what? Like everybody is based on the U.S. dollar right now, and so if the U.S. starts front running everybody else on Bitcoin, then the rest of the world, at least a large part of it, is going to follow suit. And again, we have a limited supply, man. This is not the same Bitcoin as it was in 2016, 2017. You have big players here that are buying tens of thousands of Bitcoin every day.
Yeah, it seems like that the cycle's probably elongated because of institutions and governments. I'm guessing, and it's just a guess, late next year is when the cycle will actually end. That we still have we have highs to put in beyond the 100,000. Anything could happen, but there is a bear case, and one of those bear cases is this right here. So on the surface, it's like, oh, this is unrelated. It doesn't really mean anything. But from Google's CEO, introducing Willow, our new state-of-the-art quantum computing chip with a breakthrough that can reduce errors exponentially as we scale up using more qubits, cracking a 30-year challenge in the field. In benchmark tests, Willow solved a standard computation in less than 5 minutes that would take a leading supercomputer over 10 to the 25th power years, which is insane, far beyond the age of the universe. And of course, they have more on their blog. Elon Musk is like, okay, wow, Skynet, wow for Joe Lonsdale. And then if you go down just a little bit more, for crypto holders, while Willow represents a significant breakthrough in quantum computing, it's unlikely it can crack Bitcoin in its current form. And so they go into it's a lot of detail that we're not going to go through. But some initial takes were basically like, hey, this is a massive leap forward in computer processing power. And so it can conceivably crack Bitcoin. If you have enough of these and you have a few years.
Yeah, I don't understand that viewpoint. Like, how can it crack Bitcoin?
Yeah.
It can crack the encryption on all the seed wallets. And
Yes.
so what, Google is going to now steal everybody's Bitcoin? Like, I don't understand the logic, right? Because like, oh, it can crack all of this encryption. It's like, well, the whole global financial system is fucked much quicker than Bitcoin is in that
Oh, yeah.
case. It's like saying, oh, we've developed nukes, the market's going to go down. Well, you have bigger problems than that, if you're going to use those. So my point is like, just putting the bear case or the merits of the bear case aside, the technical aspect of like, hey, how does the encryption on Bitcoin work, and so on and so forth. Like, the fact that people are immediately pointing to this as like a Bitcoin killer just is laughable to me, because it kills so many different things way before it can kill Bitcoin that are way bigger. Like, I just think that it's unrealistic, bear case.
Yeah, and as far as like cracking, like the biggest thing that they can actually crack is the seed phrase for the Satoshi's wallet itself that has
And then what?
like 100 million.
Let's say Sundar Pichai has Satoshi's seed phrase. What's he gonna do?
Probably nothing, or could sell it, or could put it in, but I mean, like legally,
Exactly,
can't
legally.
really do that. And, they would have to have over 50% of the supply of Bitcoin to actually do something detrimental. And that's kind of the beautiful thing about crypto and blockchain as a whole. There are pump and dumps. You have to be careful of that. Be careful of like who actually controls the largest amount of crypto, how dilutive it is. Bitcoin's the opposite. It's anti-dilutive. It's actually diluting less than the rate of gold. There is mining, but it's like a finite supply. And it's actually anti-dilutive because some people lose their seed phrases and they stop having. So the supply actually the accessible supply diminishes. But in order to make sweeping changes on most blockchains, you need to control at least 50.01%, the majority of the chain. And if you do that, you have a lot of money in there and you have a vested interest to not mess things up. So, of course, even Michael Saylor like controls 2% of the supply, I think. It's like comically small, and he's the biggest individual holder other than, the Satoshi wallet. So, it's kind of a nonsense thing, but it's interesting, because I'm neutral on Google, and this is one of those things that's like, yeah, they're still doing some innovation. They're not perfect, but that's a really cool breakthrough.
Yeah, absolutely. Like, but I mean, just again, the positives that level of computation can have for society, I think just that should be front and center advertised, as opposed to like the negatives around FUD on
Yeah.
Bitcoin cracking the encryption, right? Like, I also have this point, which I'll throw up, but I think we've harped on that point. So this tweet by Ben Sigmund says, "Hey, this is essentially the computation for Google Willow versus Bitcoin encryption. Bitcoiners should not worry, because Bitcoin relies on two types of encryption. The first is going to require over 1 million qubits, and Willow has achieved 105 qubits with improved error rates. So it's not even close. Again, in time, these things increase exponentially, so it will get to a point where it will be closer, which then leads us to our second argument of like, hey, how can you legally even do this? And then the second point is even tougher, and it requires millions of physical qubits to pose a real threat. So it remains safe, but he also says for now, which is interesting, right? Because there will come a point where you will have high nation state adoption, and then you could say to yourself feasibly, like, well, if the US commands a lot of this, what level, like, you have geopolitics then in play, right? I think that at that point it gets into like a fairly esoteric theoretical conversation, but like around game theory in general. But again, it's nothing that I think people should be worried about right now. Like, there are much more credible bear cases to Bitcoin today in the short term than this, right? Like Bitcoin is very cyclical, for example.
Yeah, it is. And of course, there is a higher, not a higher. It seems like that somebody that was very anti crypto is being retained on the SEC. So we'll have to see how that actually plays out. But that could be a factor too, in why Bitcoin broke down below 100,000 and hasn't recovered quite yet. So
I posted this as well, and I'd love to get your thoughts on it because I think this is an interesting reframing of the whole Bitcoin narrative. So this individual says, I bought a kilo of gold in March of 2023. He said, I didn't actually do this because I'm not retarded enough to buy a kilo of gold bar, but it's just a theoretical. The price was 74K, which was 3.33 Bitcoin. Today, the value is 94K, which is 0.95 Bitcoin. In a little less than 2 years, my gold bar's value has increased 27% in dollars. That looks like a great trade in dollars. But the thing is, now people are denominating things in Bitcoin. It lost 72% of its value in Bitcoin. Gold is collapsing in front of us. And essentially everything, when you denominate it in Bitcoin, is essentially collapsing. I retweeted and I said, hey, I love the Bitcoin denomination because that reframes the argument. And there's a massive discrepancy between, did I do well, like a first order effect of did I make money or did I lose money? But then the second order effect is, did I make money or did I lose money relative to fiat losing value over inflation? And I saw this, the historical median US house priced in USD and in Bitcoin. Like if you bought a house in 2016 and you sold it in 2024, you significantly profited. And that's great for you. Like that was a profitable investment. But in Bitcoin denomination terms, it's a massive, massive shift because of the value of Bitcoin keeps rising and it will continue to rise. And this is every 4 years, right? Like you go from 664 Bitcoin to 6 Bitcoin in a matter of 8 years. Imagine another 8 years, will it be 0.6 Bitcoin? Maybe. My point is
probably one.
Probably one. But either way, right? Regardless, the value in fiat will increase, right? And so on a first layer, it seems like it's a profitable trade because you bought this thing for 200 grand and you sold it for 400 grand. Great, you doubled your money. But if you were to essentially denominate things in Bitcoin, the rise of that underlying asset class is so violent over a long tail that it just makes everything else seem like it's losing value relative to Bitcoin and the purchasing power you have of, your ability to accumulate.
Yeah, but the reality is, like on the flip side of that, and I see what you're saying. It's not a Bitcoin versus everything. There's very few people are going to want to be 100% in Bitcoin, and I see the same kind of thing with stocks. Throw this up. We'll get in this discussion a little bit later. We'll stay on, but this kind of shows. This is the S&P 500, and Merry Christmas. It looks like a really fat Christmas tree. And the distribution of gains and losses. We'll talk about the gainers and the losers, but out there, like just in the stratosphere, is Palantir, up 344.6% year to date. Hasn't been in the S&P 500 that long, but year to date, that's just like ridiculous. Vistra doing very well. Nvidia is like looking relatively tame at a little bit less than 200%. And it can lead someone kind of like the same way with Bitcoin to be like, okay, so the asset, let's say that somebody bought Deckers. Deckers, included in the S&P 500 this year, it's up 80% year to date. That's phenomenal. But it can make somebody conclude like, oh, I bought Deckers. I'm an idiot because I didn't just buy more Palantir. And that's, that becomes dangerous because then you're always chasing that next thing. Now, Bitcoin, I'm going to start again resuming DCAing into Bitcoin, even though it's not cheap, not like it was when it was like 15,000. It bottomed out. I see where it's going long term. I've known that. I have Bitcoin as well as some Bitcoin assets, but I'm like I don't have enough. I'm not a whole coiner, unlike yourself that has like 50 coins or whatever. And I'm like I need to improve that. In fact, I might even sell out of Ethereum and just buy more Bitcoin. Not a big Bitcoin maximalist by any means, but I'd still like even seeing that chart. I don't want to be like, well, I guess I won't buy a house. I'll just buy Bitcoin. Or I guess I won't buy a new Tesla for a family. I'm going to buy Bitcoin. I guess I won't buy stocks. I'll just buy Bitcoin because, I mean, it's very volatile. It's less so the longer it ages.
Yeah.
But I mean, that's the reality. So I like having exposure. I don't like it's dangerous to have overexposure because, I mean, there's nothing preventing Bitcoin going back to, I don't think it's going to go back to 15,000, but it can go back to 70,000 tomorrow.
Sure.
It
Yeah.
can go back to 50,000. I don't know that it would go much below that. Just there's been a lot of changes in the interest in people that are buying it, but yeah, I mean, it could get cut in half in a few weeks. So
Yeah, and I think there is merit to this idea. Like whether you do it with Bitcoin or whatever, like merit to the idea of consistently DCAing in small amounts that compound over time. I was doing it with Tesla, right? Like I've told this story before in 2017 when I was no, sorry, 2019 when I was accumulating Tesla. I would play a game with myself. Like every Tesla that I saw on the street in Toronto, I would buy one share, and it only took about 6 to 9 months ish for that game to become way too expensive for me. And then it turned into like, hey, every paycheck that I get, a percentage goes into Tesla shares. And that's how Tesla eventually became 50% of my portfolio at one time. Now it's only down to 20 because I've let go of some shares at these prices. But at the same time, like there's merit to that stacking up over time. I haven't done it necessarily with Bitcoin, although I have bought several times. I think I bought like 4 or 5 times in 2024. But I've bought every single year since, oh gosh, 2020 or 2019. Bitcoin and Tesla, actually even earlier than 2019 for Bitcoin. But, and I bought like, hey, once a year or twice a year or 3 times a year. And that's it, right? Like a small handful of times. But I've still been buying every year. So it's not necessarily like a DCA where every 2 weeks I'll buy. Like I saw this one account of this guy who had bought $30 worth of Bitcoin every single day for the past like 10 years or whatever. And it was just insane performance. Again, whatever that asset class is that you choose, Bitcoin for me has always been a plan B, right? Like if shit really hits the fan and you want to have that portability, or for on whatever off chance that Bitcoin gets global adoption, becomes actually usable to tangibly replace any form of currency, like not as a store of value, not as an asset, but as a currency, like in El Salvador, as an example. Like that to me was a small percentage that can really save my entire portfolio because my entire portfolio is essentially denominated in fiat, right? And so I'm really happy because relative to my peers up here in Canada, I was telling this to a friend last night, like all of my assets, I think like 95% or so, are all in US companies. And as the Canadian dollar drops further every single day relative to the US, my assets are fine and my assets continue to appreciate. And so I view Bitcoin in very much the same way because that will continue to appreciate relative to fiat, right? And so it's just a contingency plan for me. Now, that contingency plan has become 20% of my portfolio. And if you add up all the other coins that I have, it's closer to like 25 or 30%. But that's only because it's appreciated so much.
yeah, and that's kind of the beauty is a small exposure to something that you have conviction in, but it's risky.
Yeah,
That can do very, very well. Or if you lose it, if it's like a 1% bet, you lost 1%. So it's
exactly.
outsized reward for the size of the risk. But as far as myself, like I'm buying an appropriate lot. I wouldn't go in and be like, all right, I'm going to buy $500,000 in Bitcoin. Like, no, I don't have that in cash, but B, like I wouldn't want that much.
Well, so here's the thing, Roy, and like that's I think the interesting part, because I don't want to make this all about Bitcoin, but like you asked me at the start of this conversation, why am I not buying more at 100,000? Well, let me then ask you. Let's say you just slowly DCA in, $100 here, $200 there, $1,000 here, $2,000 there, whatever, small amounts, and then over the course of 2 or 3 years, your Bitcoin does become $500,000. What do you do? Do you sell? Do you keep
No.
hodling it? Like,
So that I think of it the same way, although it's very different. I have physical silver. Like I have American Silver Eagles. I have junk silver as well. I've had it for over a decade. I sold some just because silver appreciated in price, and we had a lot more in value in silver than I had in crypto.
Mhm.
And then we needed some money just to not go into debt buying like a Tesla. So we ended up selling some silver and like $30. I think it's worth a little bit more now. That's fine. So the only reason really why I would sell Bitcoin, especially my little amount at this point, but let's say hypothetically, if I had five whole coins, $500,000 in crypto, I don't have that. But if I did, even then, it's like if I need the money for something or want to buy something, then okay, yeah, I can go ahead and sell that. But otherwise, like I'll just let it sit there, just like the silver. And the silver is there. Yeah, I like silver. Like it's fun to hold and check and stack. Like it has a nice physical feel to it. But it's really there as a hedge. If something happens as far as like with the dollar, if something happens with the electronics out there, you know, it's there. And I know a lot of people that have had, it's United States is a good place to be. The risk of that is much, much lower here. But I like to have at least a little bit of something in a hedge. It's not a massive amount. It's not a year's wage or anything like that, but it's a good chunk of money. And crypto, same thing. Although the difference is, I think crypto will dramatically outpace silver and gold and any other precious metal. But yeah, it's just a different kind of hedge for me. That's kind of how I look at it. And the best thing that I can do with my hedge is buy the amount that I'm comfortable having and then just
Mhm.
kind of forget that it exists. Check on it every now and then. Like I don't check crypto prices. Like the only reason why I know what Bitcoin is trading at is because people post it on X, and I'm like, oh, okay. Like I have some Cardano. I don't look at Cardano, and I'm glad that I don't because it's really underperformed. But I don't look at it very often. Ethereum, likewise. I just once every few months I'll look at my Coinbase wallet. I'll look at, and I have some off chain as well, or it's staked away like in your Roy. But yeah, I'll just leave it alone. It's a hedge. And it's a small amount of my overall portfolio.
Again, I think it's just good practice for people to build that habit more than anything. And it doesn't have to be with Bitcoin or Tesla or whatever. Like whatever you feel and you've researched and like you're bullish on, it can just be the SPY. It can be QQQ. Like the habit is more important than the percentage return, especially when you have a smaller portfolio.
Yeah, and
Um,
Wes is right. Like one of the downfalls of silver, yeah, another big difference is it's harder to get rid of.
yeah,
They have
yeah.
the spot price. You can't sell it at spot. Like sometimes you really can, like to a friend, or if some, they're not called dealers, brokers are desperate for silver. You can get close, maybe like American Silver Eagles. You can get a bit over, but if you're buying them, you pay a huge premium for those. So it's harder. You have to mill it. I went through all this, and I'm just like, man, it's so much easier to hold crypto. I still want physical silver. I'm not, going to get rid of that, but I'm not adding to it. I'm happy with the amount that I bought. Half of what I bought, really, back over a decade ago. So.
Did
But
you see the sailor clip around? He went on one of these media sites or media pages, and he was basically saying like, sell everything, sell your gold, and buy Bitcoin. And it's just like, dude, I get it, but at the same time, it's nobody can give you his conviction. Like you can't buy his conviction. His conviction has been built over many years of owning that one thing. Um, And I get where people are coming from when they talk about like, hey, this is a Ponzi, this is a scam, this is this and that, because of how adamant people are that hold it and how much they swear by it. It's like everybody needs to do their own research in terms of what is it, how does it work, why does it make sense, and does it make sense for their portfolio?
you want to send Matt a link? I don't know if he'll join us. He's probably just
Yeah,
teasing us. But while you're doing that, also throw up the screen and we'll talk some Tesla. I want to show this clip
yeah.
while you're sending this invite. So there's no sound. This is an update from Optimus. And so I'll just illustrate it. Like it's walking around up hills. It walks around like my 80-year-old grandfather did. But, it's getting around. And going down the hill. Per Elon Musk, they're blindfolded. It's not really blindfolded, but they haven't set up Optimus to actually be able to navigate up and down terrain. They're used to flat ground. So this is just something it's doing natively. Object avoidance, it has some of that. That's pretty cool, like the recovery from the slipping. I'll show it again. Did better that time. So here's just a lot, but basically more exciting work happening on adding vision so it can plan ahead better, making the gate look more natural. Like these things are all things that will come over time, more responsive to velocity, learning how to fall, minimize damage. Tesla, of course, is pumping. It's over, unless it's fallen since then, it went over $400. I actually ended up buying a single share last week. One. Did you see that tweet? Why I did that?
No, I didn't.
So I was with Amit, and we were talking Tesla and some different things too. And I was like, man, it's Tesla's like 6.5% of my portfolio. I would love it to be up to 10. And I see the direction it's going. I stopped buying at 220. That's just the reality. I was buying it heavy at the beginning of the year. Very glad I did. Very glad it was my number one allocation this year. But I realized, with what is happening with full self-driving, with what's happening with Optimus, and I don't think we're as far away with Optimus from that becoming a reality, like on the industrial scale. I don't think that's like 10 years away. That might be 5 years away. That might also be 2.5, 3 years away. This can ramp up really, really fast with Tesla. Mm-hmm. And there's a lot of demand for this kind of labor. There's improvements that need to be made for sure. But I mean, I don't think it's crazy to think that 5 years from now, Tesla's making good money off of Optimus. Maybe not at the commercial or the consumer level. And so I just realized, Tesla trades on a narrative. It could for sure fall back to $200. It can. We've seen it before. I would be a little bit surprised if it goes down that far. And I need to get used to, if I want to add some, buying it in the 300 range. Now it's 400. So go figure. And so I won't be DCAing very quickly, maybe a share or two per week in January, but just kind of a slow DCA. And buying that one share, it was just for myself psychologically, not focusing on like the average that I have for Tesla, which looks amazing right now. Some people have much lower, but mine is below 200. Now I don't think it's below 200. It's like 202 or something like that, 201. So that, the share price that I have as far as an average isn't the most important thing. It's the actual money that I make off of it. And it's kind of like with Palantir. If I'd bought more Palantir when it was 20, 30, $40, I have a lot of Palantir. I wasn't going to do this, but I would have been like, oh man, my $12 average is ruined. No, I made a lot of money off of it. It's great. That's a great thing to happen. So I think Optimus is doing some interesting things. Of course, China numbers were the second best ever since COVID. Let me pull that up actually, just to make sure I'm quoting it right.
And by the way, Matt, I did send you the link on our WhatsApp chat because Matt decided to watch on Roy's channel, so I can't really send him the link.
Yeah, the better channel. So thank you all for who have listened and watched them. No, just kidding. 21,900.
Since we're on that topic, Roy, can you plug your channel, please?
Oh yeah. I can't type it.
Throw it in the private. Throw it in the private chat here on StreamYard, and I will pin it to my chat. How about that?
All right. Let me just.
And we can get to this one too. So I think this is actually an interesting.
There we go.
Matthew says I'm lying. I will share our private WhatsApp chat, Matt, with the link if you really want me to.
You just send Tevis and I a Bitcoin each, and you're on.
I mean, he has more than enough Bitcoin to spare. So
Tesla, 21,900 Teslas were insured in China last week. That's the second most in the last 2 years. So those are weekly numbers. There's some incentives there, certainly. But yeah, there's a lot of things like energy sector is doing well with Tesla. Services doing very well. Interest rates falling helps. Elon Musk, President Trump. We've talked about all those things before. And so I just like, I have to normalize for myself buying Tesla at a higher level. Otherwise, I'm just never going to. So even though one share is like pretty much meaningless, like, yeah, it'll increase over time. It just got over that psychological hump. And now I'm like, okay, now I can start resuming my stupid DCAing. I just, didn't have, just stopped buying at 220. Shouldn't have, but yeah.
Yeah, man. I mean, so back when I was buying, regardless of price, it just completely changes your mentality around like, oh my gosh, this is overvalued, this is undervalued. Like, if you think that this thing, and this is the thing that all investors probably have this massive recency bias because they range bind themselves, even if it's unwilling. Like, if somebody looks at Tesla right now and they're like, oh man, it's at 400, it's near all-time highs, like I don't want to buy it, like I'm a sucker because people were buying. It's like, yeah, people were doing it back then, and just because it's 400 now doesn't mean it's not going to be 600, 1,000, 2,000, and whoever knows how many years if they continue to execute. Like, imagine you're, I don't know, 23 years old and you just opened your first brokerage account and you funded it with $800 hard-earned from your part-time job as a cashier. What are you going to do? You can't get Tesla at 100 again. You can't rewind time to get it back at like, $3 where Sawyer Merritt bought it. You're going to buy it at 400. Sorry, you're going to buy 2 shares, 400, and that's your portfolio, baby. And then when it goes to 500, you're going to be happy as hell because the next sucker is buying it for 500. And that's the thing, because these companies continue to execute on a fundamental basis. They continue to get better and they continue to yield more results for the valuation that you're buying them for. So at the end of the day, like, everybody's going to overpay for something. And then given enough time, everybody's going to have an amazing cost basis that looks like they're the smartest genius out there. And that's just the reality of the US equity markets. Like, companies go up and to the right over time.
And speaking of, I was at the Robinhood conference. We talked about that. Had separate video. And of course, we're doing Robinhood Weekly now on Mondays. But I thought that this was a pretty fun tweet, if you don't mind sharing it. This is relating to Tesla as far as like a great company and industry leader. Like, I think 4 of those in my portfolio, like 3 I'm certain of. Tesla, Palantir, Robinhood. I think the 4th is HIMS, actually. I need to spend more time, seeing those earnings reports, continue to listen to some interviews from the CEO. HIMS is very volatile. It's not for everybody. There's lots of competition. But I think they're a very, very clear leader in the industry. And I think it's too early for me to say. Maybe it's too early for the company to say that as well because it's much smaller. But this is one of those cool things. So Sam Altman, of course, OpenAI CEO, said that a few months ago, Robinhood sent them the gold credit card, probably the real gold one that's worth like $300 or whatever. And he said, I thought it was a ridiculous marketing stunt at the time. But now it's an example I give when talking about great design. By the way, I got notification that my gold card finally arrived. It's in the mailbox. I hadn't got home yet today, so I finally got one. Everybody that went to their investor day that was on the list, they got not the solid gold one, but the metal one that's gold plated. So
that's cool.
I'm excited about that. But of course, Vlad appreciated that as well. So, but this is one of those companies where, likewise, like, it's not cheap. Robinhood has fallen a good bit, but I'm like, you know what? With Robinhood 2, I think I just need to keep adding. I have a good position. I'm fairly happy with it, but I wouldn't hate having more. And the easiest thing to do, like, if you want more in a bull market, you can't just, if it's a quality company, you can't just hope and wait that you're going to get a nice dip, unless it's HIMS. And HIMS, you absolutely can. It's going to happen, especially if Tevis is buying more. It's going to tank for a little while. It's just volatile. But everything else, like in a bull market, quality companies tend to rise and continue to rise faster and higher than most even bulls expect. And so if you want to build a bigger position, you just have to get used to DCAing. And so I'm like, I have to do this with Robinhood because I want some more. I really want more Tesla. And so I absolutely have to do that too. So
we're going to get to a point where we're going to speed run some of these comments. And by
Oh yeah.
speed run some of these comments, I mean this one, I mean this one, I mean this one, and a couple of others that I'm favoriting. So stay tuned, because at the end of this episode, we will be just going through the comments, and I am jotting them down, ones that are interesting that I want us to talk about. But we're just going to run through our list of like topics that we have for this episode, and then it's a free for all. Okay, so I'm not ignoring them. I do see them, and I will get to them. I promise, because they're interesting, and I want to talk about them. And Matt still has not come on the show, even though he has the invite, and even though it is seen. WhatsApp does send read receipts, and I can see that you've seen it, Matthew. So TikTok, we're waiting. Yes.
Okay, what did you think about this, Tevis? Lisa Su, AMD CEO, Time CEO of the Year.
I didn't get this, man. Honestly, like I don't get it. Like, how do you quantify the CEO of the year? Like, it's got to be based on contributions, right? Well, okay. So if I'm thinking about it systematically, here's how I would go about it. How do I quantify CEO of the year? It's got to be based on contributions. Okay, what is the most impactful vertical in 2024? AI, probably. Okay, great. Is Lisa Su the biggest contributor in AI this year? Possibly.
Not
You
even
have,
close.
Jensen, you have Elon, you have Sam Altman, who we just talked about. You have so many others that are making positive contributions. AMD is not, the leader in AI. They're not even the leader in the chips category, which is like a subsection. Like even Alex Karp to some degree. I don't want to conflate it too much with the stock performance, because I think that also sends the wrong message. But at
It
the end of
does.
the day, and those are just the categories in AI. You could very well make an argument for like other categories, right? Like Bitcoin. Sure, Michael Saylor could be up there because of the novelty of the convertible bond offering. Whatever, so my point is, it's like go systematically in terms of the vertical, and then from there find out who are the leaders in that subsection. I think that, well, I don't want to be like an Elon stan, but putting your entire net worth on the line for a presidential candidate, and not only your net worth on the line, but the values of your companies, plural, on the line, I think that's something that is pretty ballsy to do, and it paid off in a big way.
I had somebody push back on, because I listed, I was like, okay, you have Jensen, you have Elon, you have Karp. I think any three of those could have won. You can throw Sam Altman in there. I don't love him, but I mean, sure, no problem with that. Michael Saylor, I mentioned. Vlad, is like the next tier. David Velez of Nubank, I think very good. Carvana, if you want to do it just based on actual acceleration of the business and stock price or stock performance, App 11 and Carvana, those would be potential ones, or like a turnaround CEO, Alex Chris. Lisa Su is great. I think she's brilliant. I think she's a very, very good CEO. AMD, this one just wasn't their year, not just as terms as a stock, but a company as well. It seems like they're having issues with their moat. There's that quote from Amazon about it's not Blackwell, but one of their products just really not seeing the demand ramp. They said, "Oh, that's not true." Well, we'll see. Like the time will tell. And I mean, that's one of the reasons why the stock is actually down year to date, despite having all kinds of tailwinds behind it. So, and part of it too was it was up pretty high in speculation. That happens. Things retrace and need a little while to build into and grow into that valuation. That's going to happen with Palantir down the road. But yeah, it just seemed weird to me that this just wasn't a year where, she was incredible and extraordinary versus, like Jensen, Elon, and Karp. So yeah, Time Magazine, not the magazine of the year.
But like, I mean, I'm sure there's other CEOs that are lower profile or in startup world, private companies even, that could make for a more interesting story. And like, I don't want to harp on Lisa, because I'm sure she's doing quite a bit. I think somebody even commented here, around the open source software. But like, again, it's if you're looking at it from a not political lens. But, from a more holistic, analytical, logic based side of things, there's a whole deep blue ocean of CEOs out there who are doing amazing things, not only just in AI, but like robotics, healthcare in general, like all the way down to like Neuralink, like so many different interest offerings out there that have the potential to completely be paradigm shifts in our society. And you're like, all right, well, let's go for chips and let's go for not even the best performing company this year for chips. Cool. All right, cool. So that's my thoughts.
Oh yeah, no, it makes sense. And so like the last thing I think that we had as a topic before we get into the blitz is
Mhm.
looking at winners and losers. I showed you this chart before. This is, by the way, if you'll throw this up, Robinhood's newsletter, Sherwood. It's really good. I think it's free for everybody. I don't think you have to use Robinhood. You can even use it up in Canada. And so looking at winners and losers in the S&P 500, I was actually more curious on losers rather than winners. So here are the worst, the bottom 10 performing S&P 500. Let me blow that up a little bit. So some of these are not common names. Corvo, like Biogen, I've heard of them at least. Corvo, I've never heard of before, to be honest. Celanese, never heard of it before today. All the rest I've heard of. Some, well, actually one I even own, Enphase. Funny thing is, Walgreens Boot Alliance, did you see what happened with it today?
No, and just remind me again, this list is the biggest losers of the year.
Biggest losers of the year that are in the S&P 500 index.
What happened to Walgreens?
Walgreens went up close to 20% earlier today. It's like up 17 something percent amid speculation of a buyout and them going private. So buyout rumors will do that. Walgreens, I mean, it's a real business. I think in a lot of trouble, but so there's you recognize, of course, Moderna, Intel, Walgreens, probably Enphase because we talked about that. I'm sure Dollar Tree,
Estee Lauder, Boeing. I recognize pretty much all of them.
So which of these, if you had to buy one, would you be most interested in buying and holding for like the next 5 years, and why?
Well, I don't like my knowledge on them is not equal, so I'm gonna have biases. It really depends. So my biases are towards the companies I know more about, which is Enphase, right? Like because I'm long tail bullish on solar, regardless of the cyclicality of it. I think Estee Lauder also is interesting. If we go into a lower rate environment, more consumer spending, I think that category can see a macro tailwind. Again, I know nothing about the business financials or fundamentals. I wouldn't buy Boeing. I wouldn't buy Walgreens. I wouldn't really buy Dollar Tree or Moderna for that matter. I wouldn't buy Intel. I don't know what Celanese is. And then Corvo, I'd have to read more into it. I believe they're like a hardware, like a tech hardware company, but I could be totally wrong on that. And then Biogen could be interesting if you're bullish on on healthcare in general.
Yeah, GD said Corvo was a RF Micro years ago, a chip company. So, but yeah, I'd never heard of them before today. For me, obviously it's Enphase because I own Enphase. And the reason why out of these, it's not just because it fell, because like Walgreens I would not touch. Might make some money off of it, especially as a trade. But I think that's a deteriorating business that's not being led particularly well. Competition, crime and corruption, and even like things becoming more digital, such as like the pharmacy fill. Like the Amazon does a lot more damage with their product offering to Walgreens than they do to Hims. So they're in a hard place. Like I would never buy them, but Enphase is still making money. It's very cyclical. This is a down cycle. Too much negativity. Basically, everything was priced in. They have a really, really good CEO, same CEO as they had back when the stock was much higher and everybody loved the business, and now they hate it all of a sudden. Plus, they're a business to consumer product, and they have launched a lot of new partnerships, especially in demographics like in Europe, where they frankly just have not been a leader there. And as far as the cycle, like solar cycles, like this will be the third bear market that they will have survived. They're going to be around a long time. And I think they're a clear leader in this space. They don't sell panels, but that's a commodity. That's fine. They sell battery products. They sell inverters. That's what they're most known for. Now, if I had to choose a name outside of it, I would probably actually choose Intel. The reason why is I just don't know enough about Estee Lauder. What you said makes sense. But yeah, Dollar Tree has the same kind of issue as Walgreens Bud Alliance. Not quite as bad, but there's some problems there. Moderna, I don't love, especially with RFK Jr. In place. And I know some people think differently, and I don't know a ton about that. But Intel, like Boeing, kind of has a similar setup where they have they're too big to fail. They will have a new CEO. We'll have to see how they do. But with the nearshoring, with the government grants, and them just handing out a lot of money, it's difficult to see Intel not stumble its way to at least some profit at some point in the future. It feels inevitable, but I would not be real excited to buy that, nor would I Boeing, but I would pick Intel over Boeing sure, and over Estee Lauder.
I'm sure people said the exact same thing about General Electric 50 years ago and about Kodak 20 years ago.
Yeah, but I mean, that's like when you completely miss whatever the next thing is. And I don't think Intel has done that. They've just been pretty mismanaged. And of course, there's the upside of Intel too. Like I don't think China will invade Taiwan. I haven't thought it the whole time. I think it's even less likely right now, especially with Donald Trump getting in. But if they do, like Intel will print money. That's not why I would buy it. I wouldn't want to buy it. The only one of these I'd actually want to own is Enphase. But if I had to buy another one, it would be Intel.
I also think this comment is interesting. For me, Moderna, assuming they use AI to cure cancer in the next 3 years, like, man, if any company out there, like, it just goes against, as much as I want cancer to be cured, don't get me wrong, like, I would love that for humanity. But I don't think that a company with capitalist intentions is going to do that because it's not a recurring business model that they can forecast out. Like, even with COVID, they were like, hey, we now have a gazillion booster shots that you now have to take. Like with cancer, I wouldn't be surprised that even if they had a cure to it, they wouldn't roll it out until they can sell a subscription against it or something to make a recurring like dependency on their business so that they can increase yield for shareholders. That's my cynical take.
Yeah.
Okay, let's do a little bit of SoFi because I promised people.
Okay.
And well, what were you going to say first?
I was going to say Blitz, but we'll do SoFi first and then Blitz.
Let's do a little bit of SoFi, and we will talk about HIMS. I didn't do HIMS weekly. That's my fault. That's my fault, Jerome Powell. I'm sorry. Don't pause rate cuts next week. Okay, SoFi. We had short interest come out for SoFi earlier today. Have you seen this, Roy?
No.
Great. We're going to get your first take. So I posted this, and everybody, if you haven't done so already, please share this out for other SoFi investors. SoFi, I said breaking, SoFi short sellers. Short interest drops to 12.8% of the float. 136 million shares sold short as of the end of November versus 148 million on November 15th. So about 12 million shares returned. Short interest peaked on August 15th at 192 million shares sold short. This is over 20% short interest for SoFi and has declined in every single short report since, and they do these every 2 weeks. There is still more room to fall as short sellers have been burned on the run up to $16. This is why we're seeing the short interest numbers fall. But this is actually the second lowest short interest in 2024. The lowest was the very first report on January 12th, 2024, when we had 118 million shares sold short, and the stock was $8 a share. And ever since then, the number has been increasing gradually. I suspect over the last two reports until the end of the year, we're going to have one for mid-December, and then we're going to have one around the second week of January for end of December to see how we end up the year. I suspect that both of those reports are going to see a continuation of the decline for SoFi short interest, possibly even to decline under 10%, but I'm not holding my breath for that. However, if the macro is weak and if SoFi is if something happens with rate cuts next week, or if SoFi sees a continued pullback, I wouldn't be surprised to see that short interest number actually peaking back upwards, with shorts doubling down, especially if you hit 14 or 13 or even $12 a share or even lower, with shorts actually doubling down on the positions as opposed to closing them out altogether. Roy, I'd love to get your thoughts.
I mean, that's not too shocking, just given the rise of SoFi and also the tailwinds, which, I mean, most short sellers realize like there's a lot on SoFi side, even if you don't like the company at all. Of course, there's some crazy people that want to do a pair trade between Lending Club and SoFi and just hurt their profits from Lending Club. I don't get that. But, typically as share prices rise, shorts are getting out. Part of the rise is shorts covering. But I mean, fundamentally, this is a quality business. It never made sense for it to be short at this extent, especially when they turned a profit, especially when they announced lending reacceleration, especially when they beat quarter after quarter after quarter, and you're somehow doubting their guidance. It just doesn't make sense. There's things you can doubt about SoFi, but like going short is it's crazy. So I think that I'll continue as the stock rises. If we do get a correction, SoFi falls to $10 a share, it'll probably go up as far as short interest, just because shorts are greedy.
Shorts are indeed greedy. I actually wrote up the script for a SoFi video right before this, and I'll have my call with one of our viewers right after this, and then I'll record this video. But yeah, I basically talk about that. I talk about the Bank of America analyst downgrade. I wonder if you've seen that news. I found that really interesting as well. But we'll cover most of that on SoFi Weekly on Friday, so I don't want to steal the thunder of that show. When will SoFi go up?
Never. It'll never go up.
It's just a bank, man. Like, geez.
Yeah.
Already overvalued for just the bank.
Dead money, apparently.
Dead money. Opportunity cost is huge on this name. It's never going to go up.
Yeah.
Okay. Let's take a look here. Oh, any catalyst upcoming for SoFi?
I mean,
rate cuts next week.
Yeah. And it's very likely. I haven't looked this week, but last week it was like 80 something percent. I don't think it's changed much. CPI does come out, I believe, tomorrow. That may have an impact. If we see reacceleration in inflation, and we've seen it basically come in line for a little while, but it's kind of flat at this point. If we see a lot of reacceleration, then maybe rate cuts don't happen for a little while. But
yeah, bro, it's been dead money for 1 to 2 weeks. Like chop. We got to get this thing moving.
Yeah.
I can't believe I had to wait 2 weeks with the stock not moving up.
Yeah, it's kind of like when Palantir is like down like 1% for like a couple of weeks, and it's like, oh man, will this stock ever move? I'll see and I'm like, I don't know if people are joking or like, if we're just spoiled or what. So,
I was going to say something, but I forgot what it is. Oh yes, how is Tevis 2.0 going? I will talk. So here's the thing, man. I would love nothing more than to talk about just my wheel strategy of selling calls, selling puts, and all that. Those videos don't perform well. They actually do the worst out of all of my videos. So I was thinking of potentially turning it into a live show where I just walk through the trades and field questions that people have. That might be interesting. Or I might just continue to make them because that's what I enjoy talking about. And this is not a job for me. So you guys get the content that I want to make. Sorry. But yeah, I think we're over time to talk about that. You should do a wheel strategy weekly, man. I'm like Gulliver, tied down by the commitments of weekly shows.
Don't do
weekly, Bootleg weekly, SoFi weekly. It's like, geez. I'm doing like a Riot or Miners show with TJ, which is going to be interesting. So people tune in for a very, very fun episode tomorrow. I don't use Robinhood because I'm up in Canada. And let's get to the round table of questions. So, Roy, I do want to limit us to a few minutes maybe for each of these topics.
Probably less.
I
think blitz, let's try to answer maybe in a minute each, just so it's an actual blitz, because there's a lot of questions.
Okay, cool. A minute each. Problem with Enphase, Roy, is that there's no ROI for a customer. All my neighbors regret installing it. It's too expensive.
Well, if you're saying ROI is Roy, I'm there for the customer. I'm happy to help them. I don't think I'm too expensive. No, so it's cyclical. Rates are high. Electricity is not particularly high, depending where you're at, but energy demand is going up over time. Nuclear. Part of the reason why there's a couple of things. One is oil has been pumped out at a very high rate. The United States has produced more oil under Biden than any other time in its history, and it is the world leader in oil production. Of course, that has an impact on energy prices. Nuclear reactors have been reactivated that were deactivated for a while, and I believe all but one has been reactivated that's able to in the United States. Energy demand will keep going up just because of a lot of factors, including AI. As a result, there's a multi-level solution for that, and one of those is solar. Solar is a very good solution, especially as rates fall, and rates will fall. It's just a matter of time.
Great answer. I agree with Roy. Thoughts on Christmas rally?
This one's you.
I do think we're getting a Christmas rally. I think all of the numbers are going to be positive. The jobs number last week was positive. I think rate cuts. We'll see how inflation comes out. It's going to come out tomorrow. And then rate cuts are going to be next week, probably as a response to that number. So if inflation comes in not great, then it could also spell trouble for rate cuts. But rate cuts right now are like 85% or so priced in by the market. And so I do think that we will be having a Christmas rally this year, especially as people anticipate that inauguration in January. Of course, it's nothing like, oh my gosh, this market is going to go crazy, because the market has already run up quite a bit. And this is the breather that we're taking. But again, a lot of it is depending on the macro, is depending on these numbers. If inflation comes in not so hot, if rates do not get cut, if the Fed decides to pause for one round, or if anything geopolitical breaks, then Christmas rally is off. But if everything goes as according to plan over the next 2 weeks, then I think Christmas rally is on. Anything to add?
Yeah, throw this up. I'll just show you. So like Black Friday, Cyber Monday, Cyber 5, phenomenal week for e-commerce, certainly. PayPal mentioned like year over year on Cyber Monday, they were up like almost 20% of the volume. Like, it's just insane. You see what Stripe did, phenomenal. Amazon, anything that released numbers basically did great. And even in mall locations, you can see that those visits were up before Thanksgiving, and of course throughout November as well. Just a lot of foot traffic. It's not just a one-day thing. And so the consumer is very resilient. CPI has been fine. Employment's been okay. Not great, actually. Those numbers were not phenomenal. I think everything's lining up for more rate cuts. As long as CPI is not like something crazy, I think we're going to continue to rally, and we'll have that Santa rally. I do expect there to be a pullback at some point, and I don't think that this is it. Like, I've seen some headlines, and I don't know if they're sarcastic, but people are freaking out because it's like S&P 500 is down like 1% over the last 2 days. It's like, okay, it's not even down 1%. It's like, this is fine. But no, I think we'll get the rally, and at some point early next year, in January probably, we'll see that pullback. It's kind of like what happened last year.
Roy, this next one is for you. Do you understand that you're paying $362 for every $1 of Palantir earnings currently, right? It's amazing to me that many Palantir shareholders are not trimming their positions. Go ahead, Roy.
Yeah, I bet he would have said the exact same thing when Palantir was trading at 40. Look at where we are. He probably would have said exactly the same thing when it's trading at 20. Look at where we are. You know, I even bet he would have been one of those that would have sold Palantir at, what was it that you sold at Tevis at? 17, 13?
Something like that, yeah.
Yeah. There's two things. One is PE is not a very good measure on a company that's brand new to profitability. No matter what measure you look at Palantir, it is wildly expensive, wildly. So I don't disagree with that. I am actually going to be trimming in January. So I'm going to take about a third of the position and sell it. And I think that's one of the reasons, too, why we'll get a pullback in January, because there's a lot of folks like me that don't really want to pay taxes anytime soon. And so if I sell in January, even though they're long-term capital gains, it's something I don't have to worry about for a year and a half.
That's a great answer. the wildly overvalued. I appreciate your honesty, your intellectual honesty in admitting that.
Oh yeah, no, I didn't say overvalued. I think I said expensive, but it's wildly expensive. Two different things.
Okay. Since somebody also asked about this, let me just find the question. What do you guys think about new in 2025? I recently bought new in Leaps. Roy, I know you've been recently buying new in shares. We both have been recent buyers in the low teens. Of course, our friend Tanner has been buying at like $3 to $4. So, we're pumping his bags a little bit. But at the same time, I think that new on a pullback, like the reason I'm buying it is because I think that the fundamentals of the business right now, relative to the stock drop that we've had, like from 16 to 11, the business is doing very well, and that's going to reflect, upside in 2025 because I think that's going to continue. Now, the pullback, I think, is warranted for the reason why many people don't buy new and why I was even skeptical. And I think the reason also why I'm not buying shares, I'm just buying, like, I'm limiting my exposure in the form of Leaps, which is the geopolitical risk of this not being a US company. That's like, I think, the main bear case that anybody would have for new, because if you had a US company posting the exact same numbers that new is, it would be the next Palantir. It would not just be a bank. It would be like new has some incredible, crazy numbers.
Yeah, it'd be trading at like $50 a share. And there's always going to be a discount for overseas, especially areas that are unstable. There's a lot of issues in Brazil. I think realistically between geopolitical issues in Brazil and also Mexico, like it's a new launch there, and also to a lesser extent Colombia. We'll have to see how the consumers do. I know Nubank will be around long term. I see them as a JP Morgan Chase of all of Latin America eventually. Like they're going to win it out that. It wouldn't shock me if this entire year is a lost year as far as not the company. Company will be fine, but as far as the stock, just because of the risk. And I'm fine with that. Like Nubank is one of those that I probably will own for a decade, at least, just because they're phenomenal. Like they're a well-executed company that's born in a recession, that is resilient. Like even if, and I don't think it'll come to this, but even if civil war breaks out in Brazil, their largest market and where they're founded, Nubank will survive. Will they thrive? No, absolutely not. It's going to be rough for a number of years, but that's like the worst case scenario. So yeah, personally, what I'm thinking is we have a year to buy, but I would rather buy now and be wrong, because like Tesla, I was wrong. I was like, hey, right, I'm buying at 140, 150, 160. People are saying dead money. Maybe they're right for a while. When rates come down, then Tesla will go up. And of course, it happened a lot faster than even I expected.
Yeah, so I have I think this is where our perspectives on new differ, because for me, it is very much a trade. This is also why I'm in it through Leaps. Like new for me right now is where Roy was with Robinhood a year ago, where I'm just buying Leaps, small position. And then if it does continue to fall, the Leaps will be completely in the gutter. And that's fine, because I'll be buying shares at that point. But right now, if this thing were to go to $16 or $18 tomorrow, I'd probably flip those Leaps for like 200% and be out, like say, hey, thank you very much, Nubank. You've treated me very nicely for the short period of time we've known each other. And I will be taking my gains elsewhere. So I'm not afraid to really cut my new position. I'm not emotionally attached to new in any form or another. It is a trade for me. But again, if it becomes like way too good of a deal, then I am not closed off to the idea of buying shares. And actually, like when I buy shares, I'm going in it for the long run for the most part. When I'm buying Leaps, I'm like, okay, cool. Let me just arbitrage some like this correction that we've had in new and go from there. So if we have a rough 2025, that is, I think, good for Roy because he's accumulating, and bad for me because time value money.
Well, and I did buy Leaps too, but they're long dated. So they're 2026 17 strike. What strike? Do you mind sharing what strike and what year you're doing?
Yes, I can share that with you. Let me open up my brokerage. It's 2027. I can't remember if it was a 15 or not. They don't have a lot of options, but let me just take a look.
Oh, yeah.
Really
It
quick.
is 2027. I misspoke. Yeah. Jan 2027, 17 strike is what I did.
So I
would be a little surprised
$15.
if it wasn't at least there.
Jan 2027, $15 calls. I'm currently down 11% on it. Thanks very much, Nubank.
Yeah.
Shitty Brazilian company.
It's actually my worst performer this year now because of all the Brazilian turmoil. So, but that's fine. It's a long-term buy. Not every stock needs to go up all the time. So, all right, next one.
Next topic. And if you guys are liking this rapid fire, just drop a like, subscribe to Roy if you haven't done so already. And what level to get into hymns? So I know he didn't have a hymns weekly, and I feel like Roy's going to say the exact same thing here. It really depends on your own portfolio. It depends on your goals. It depends on how long you want to hold this thing for. I do think that if you are bullish on hymns fundamentally, and you think that they have a solid chance of disrupting the existing space, that's a huge space to be in. And they're like a $5 billion company, something like that. This company can go far, far, far beyond $30 a share. Can it do that over the next several months? I mean, it's like flip a coin, basically, with hymns, because it can just as easily go to 20 as it can go to 40 by next week. And yes, I do mean next week. So, buyer beware, make your own decisions on fundamentals. For myself, hymns is like the loveliest company because they've treated me so amazing over this very short period of time. I am up. I actually checked this yesterday with a friend. I'm up 60% on my main portfolio, and I'm up over 100% on shares in my secondary portfolio, and I'm up over 200% on my 2027 $30 leaps. So, and not to mention the $5,000 that I have from cash secured puts on hymns. I also have cash secured puts that are currently open on hymns right now. So I could be the proud owner of several hundred more shares by the end of this week. But point being, we started buying this company, Roy and I, in the teens, and now it's in the 30s. It can just as easily end the year in the $45. It could also just end the year back in the teens. So it really depends on what your goals are and what your risk tolerance is. But I think that if you're in it for the long term, is 30 too much of a price to pay? Go back to my conversation around Tesla. At 400, if I think that Tesla is going to change the world with Optimus, I'd be buying hand over fist at 400 every day of the week. But with that said, the undertone is that you're okay if you take a 50% drawdown because this thing is short-term overvalued or it's run too much. If your reaction, if HIMS goes to 15 is like, oh my God, this is the best deal in the world, I'm going to try to find some money so I can buy more shares, then yeah, go ahead and buy it at 30 if you plan on holding it for a long term. If you are thinking, oh, if this thing goes to 15, I'm going to panic, then don't buy it at 30. But underlying all that, please do your own research. That's my whole thing.
Yeah. For me personally, I'll add more at 25. And I have a good size position right now. If I didn't, I'd probably buy more right now.
Well, I think this is also good. Yeah. So the FDA decision on the tirzepatide shortage is pushed to December 19th. Probably a smart idea to wait, or even if you want to play it more aggressive because you think the decision is going to be positive, just buy half before and then half after, because if this thing jumps 10 or more percent on that decision, then you could miss your chance to buy it at 30. But again, I think for myself, I have 2025 January calls at $23, which are like ridiculously appreciated at this point. I might be selling those ahead of the December 19th decision, because this thing can very easily fall back into the 20s if that decision is negative. So that's the short-term thing to keep in mind in December, like literally next week, basically. Okay. Anything else? Next question.
Next.
Okay. Sofi going 20.
Yes. Next year. Yep. By the end of the year, probably not. But I'd love to be wrong. I think 25 is my base level, base price target prediction next year.
Yeah. So my whole prediction that I made literally at the beginning of this year, 12 months ago, was that I think we will touch 20 and probably fall back down to 18 to end off the year. I would love to be right on that, just for the content, if nothing else. But yeah, like next year, it's like I would be willing to bet a lot of money that we're at 20 next year. Again, barring anything huge on a macro basis, like if we go to have another world war, then we're not hitting 20 next year, guys. But other than that, if the macro is good, which it seems like it will be, yeah, next year for sure. End of year, tougher.
Yeah.
What price will Bitcoin be at the end of the year? Roy, you want to start?
I don't know. Let's say 110,000.
Yeah, 120 was my thing. Like, I think it could have the potential to reach 120. Probably will pull back from there, but we'll see where it goes. Again, depends on if we have a Christmas rally or not.
And it tends to rally around Christmas. So yeah.
Yep. Noto just responded to Chris that he wants crypto back if regulators allow it. Absolutely, 1,010%, and that would be big too.
That probably won't come this year, but it could come. I mean, next year it could come in 2026. So, SEC takes a little while.
Let me see if I can. Sorry, people are talking about a whole cup. Oh, when is the annexation of Canada? Is it bullish or a liability? I also favorited that one because I wanted to talk about it. Yeah, man, our governor up here. I don't know when they're going to make that happen, but I think that would be bullish for it to happen because we get to be on the US dollar and not a dollar that depreciates every year against the US dollar. It's literally like 1.4, Canadian dollars for one US dollar. It's like monopoly money. It just evaporates in front of you. I don't know. I'm sure the US would love the natural resources. Would the politicians go for it? Like the chances that I put on it are like less than 1% that it actually happens. But boy, would it be nice for it to happen. I would love that to happen.
Yeah, it's not happening, but yeah, it's a nice thought.
It's not happening. Okay.
You want to throw up Trey Greenleaf's number one on the watch list that we haven't bought?
I favorited that as well.
That's Amazon for me. I've had that on the watch list for a long, long time. I've never bought it. Initially, I didn't buy it just because I didn't have any extra cash. It's like, oh, I need more Palantir. Don't have that problem right now. I've got cash. I'll be taking profits. And so I'll probably be buying Amazon in January. I'll limit myself to one new position next year. So I really have to think about it. But I think it's a no-brainer. They have a lot going for them. I am looking at a couple other different names, including NVIDIA. So we'll just have to see.
That is a company that I did buy a couple hundred shares in, like yesterday. NVIDIA.
Mm-hmm.
I did, just based on our conversation that we were having on Friday. It's a trade for me. Like, don't get excited, guys. I'm not like an NVIDIA stan right now, but it's just a trade. It's something that I can sell against. It's something that's more stable. Google is really interesting with Willow. Just, I don't know. I feel like it's going to be undervalued. Amazon, absolutely 1,000%. I think you can make a ton of money just arbitraging FANGs, dude. Like, I think you can make a ton of money at any point in time. One of them is going to be mispriced relative to the others. And if you just cycle between them, like, you remember my Apple trade in spring of this year? I was like, hey, Apple is absolutely the lowest, most mispriced FANG. Bought it and flipped it for like 30-something% profit in 2 months. And I was like live streaming all throughout that decision-making process. I was saying, hey, WWDC is going to come out. They're going to be announcing these new products. They haven't showed their hand in AI, whatever. And now the attention has, and it was Google for a point in time, right? Google fell to like 140, 150. And like when that woke Gemini stuff came out, like the Black George Washington, and now Willow comes out and Google's soaring, right? It was up over 5%. It's at 185. It still hasn't peaked where it peaked at 190, right? Amazon is the other one, right? Like Jeff was selling at 200 hand over fist. And as soon as he stopped selling, guess what? Amazon's like 220 now, right? So my point is you can definitely make a solid return, just arbitraging fangs against each other, because there is always a favorite from the market's perspective at any point in time.
I saw a question in there from Hannah, hood to 45. Yeah, next year, barring, again, a black swan, I think it's going to go a lot higher than 45. Like it's fallen a good bit the last couple of days, but it's gone up a lot. Like it's a phenomenal performer. Of course, went to the Robinhood Investor Day. Separate video on that. Hood Weekly was yesterday, but incredible company with a lot of tailwinds. As long as we're in a bull market, they're going to do very, very, very well, and they're disrupting a lot of other people that are in the space. It's the Robinhood era. They're a clear leader, a clear winner from the Trump election. So I need to spend a little bit more time just looking at Robinhood, but I'm thinking that they probably get to 65 this next year, base target.
Wow, base target. That's interesting. Do you think AMD is a good buy for next year?
I don't know. I like Lisa Su a lot as a CEO. I like
Person of the year, CEO of the year, buddy.
Yeah, best CEO on the planet.
Best one on the planet.
She is really good though. Like, even though I think that they picked the wrong person, like she's phenomenal. She's led that company well. I like that AMD has been kind of flat on the year. But as far as a business, I don't understand enough of the business. I think that they are probably correct and Amazon is not, as far as how that new product is performing. I think there is demand for that product. But as we can see with Google, for instance, like there are hyperscalers that are getting into not manufacturing, but designing CPUs. So, and of course, NVIDIA is actually going after with one of their newer products as well, something AMD has. So I'm not clear on the moat. They may have a really strong moat. I don't know. And I have a pretty concentrated portfolio, and I tend to not get into stocks that I'm just not confident in. And AMD, I'm not. Like, I think they'll be fine, but I have a lot more conviction in other companies.
Yeah, like I know Jeremy's been buying AMD hand over fist, and I understand the, bull case that he puts together. I've seen his content on it. I don't have any unique thoughts on AMD because I haven't done the research on it. From the conversations that have been going on, like I know Steve and Matt, if he's still here, I'm sure he'll chime in, but they're really bullish on NVIDIA over AMD because of the dominance that NVIDIA has, regardless of the discrepancy in the market caps. So I don't know. I don't have a strong opinion. It could definitely be a winner in that secular trend. They could all be winners. It's just a matter of to what degree and who's going to capture that space. So if AMD has a solid plan on how are they going to capture more market share, then I could definitely see them outperforming. But so far, my very basic understanding of AMD is that they don't have that. But again, I haven't done the due diligence.
Yeah.
Am I still in? Yeah.
Gut feeling is, AMD's probably fine. I just won't put any money on the table for that. So.
Yeah. Really, Hood? CNBC is bashing. Big Boy's bashing is from Citadel. So, yeah, man. Why are you still in Hood if CNBC is bashing it? Why are you still in Sofi if Bank of America just issued a short report? Like, why are you still in Palantir, man?
Like just the comments from analysts, from institutions, and the clear institutional buying for Robinhood, and then you're talking to some of those folks. They see like that Investor Day was incredible. It frankly was incredible. They had a great event too in Miami, but I thought this was even better. They appreciate the risks of business they're in. They know what they're doing. They have a clear plan over the next 10 years, probably further out than that, to be honest. But it's just like, writing on a napkin at that point, because anything can happen. But man, they are disrupting entire industries, and people are still sleeping on Robinhood, even though it's risen a lot. Retail, I should say. It's a heavy institutional name. I get a lot of pushback anytime I say something about Hood. A lot less now, since it's no longer trading at $9. It's at 40 or whatever, just under 40.
I mean, you have a Hood show now, so you are the media now.
Exactly. We're the new media. So actually, let me ask you on Hood, Tevis.
Sure.
At what? Let's assume you have cash for this, so it's not going to be an issue of like it falling to 14 and you not being able to do just because of that reason. At what price would you be interested in buying Hood now?
Man, I didn't buy it at 14, so like I'm an idiot for saying any price at this point. Like, you know what I'm saying? Like, I
Yeah,
just I I can't checkmate myself by saying any price because then you just come back with, well, why didn't you fucking buy it then, Tevis?
nah, dude,
So,
I would never do that.
oh my God, stop it. Don't even get me started.
No,
Um,
like, but honestly, if it falls into the 20s, I think it's a steal at that point. They're
sure.
growing. It's like 37% year over year, but it's basically it's 40% year over year, especially with what they've done in crypto in October and November. My goodness, man.
Look, man, so there's two reasons I'm not in Hood. And first, I'll give you one reason that I like love Hood. Their product innovation, I think, is top notch. I think it just like it makes my brain happy to see their user experience, like as a product person. It's the reason why I also love a broker up here called Well Simple. They basically mimic Hood in a lot of their functionality and a lot of their user experience, all the way down to like their marketing is more modern and just their customer experience in general is amazing. So I think Hood, like I would love to be a shareholder because of that reason, because I just want a reason to follow them and listen to their investor, firesides and all this stuff. And like from a pure product perspective, like that's my domain as a product manager. There are two reasons why I'm not buying it is because one, I feel that there's better opportunities in other plays in terms of like what hasn't run up so much. Like miners is like I bought more Clean Spark today, right at $13. Am I more bullish on Clean Spark than I am on Hood? Absolutely not. Absolutely not. But do I think that I can get a like as a trade, I can get more? And so you're in two different mind frames, investing versus trading. So
Hmm.
I do think that I can get more here. And then if I'm also running a wheel, then there's like that also messes with your mind. The other reason that I'm not in Hood is because um, I totally fucking blanked on it now.
So, I'll just jump in. Like I see, I'll answer this other extra question that Sven put in there. I know Hood and follow it for a long time, but why Hood, not SoFi? I mean, we're in SoFi. We have a
Yeah,
lot more SoFi. Like
that's
Tevis has no Robinhood. He has a ton of SoFi. My SoFi position is 3 times as large as Robinhood. Short term, I think SoFi beats Robinhood over this next year for performance. I think it
yeah,
might not be that far apart. Long term, I think Robinhood is going to outperform SoFi. I really do.
yeah.
I need to see something more from the tech platform to believe otherwise. I think they're both going to be very good. I probably will continue to hold both for a decade plus. But let's do 2 more questions, Tevis,
Well,
and we'll
I
call it a
just
wrap.
wanted to because I just remembered you jogged my memory with the SoFi thing. The second reason I'm not buying Hood is the same that I'm not buying Palantir or the same reason that I sold Palantir. It's just brain share. I can only focus on so many things. I've been reducing my positions actively this year, trying to at least, and I will be into 2025 and probably beyond because number one, concentration is better for wealth accumulation. But number two, there's only so many companies I can feasibly research. I can't really stay on top of all of these companies. It's the same reason I don't buy Shift 4. It's the same reason I don't buy, you know, all of these other companies that Tanner talks about because I just don't have the mental bandwidth to juggle that many things and actually, do them all justice. Can
Yeah,
I
that's
buy
fair.
something and, I can buy Robinhood and then maybe I'll just retweet the odd tweet that Vlad has and maybe I will listen into one of their investor days and that's great and I'll listen into their earnings call. But I can't go in Robinhood at the same level of depth that I'm in Bitcoin, Tesla, SoFi, because those are my horses essentially in this race. And that's the main reason I'm not, making a huge position. Like Hims, for example, it's 10% of my portfolio right now. I got to 10%. But at the same time, Hims, like I am in the trenches, dude, with Hims. Like I know that company in and out, and I'm actively spending hours and hours every week reading about that company. And so do I really want to make another commitment like that with another company? It's a tough hurdle rate, right? Like with any company, regardless of whether it's Hood or Palantir or whatever Shift4 or any of these other companies that you guys talk about.
Okay, 2 more questions.
2 more questions. Still in Celsius. Yes, I am still in Celsius. I plan on buying more in January, starting off with Leaps and then probably with shares as well. But I don't plan on making it more than 5% of my portfolio. I think currently it's like 1% of my portfolio. Any question you want to bring up?
I did see one earlier. Actually, yeah, throw up the is Unity an opportunity, Tevis? The Schiffer.
I gotta find it.
626.
626. 726.
Oh, yeah.
Is Unity an opportunity, Tevis? Okay. There's a lot that's fundamentally broken with Unity right now. They are on the path to rebuilding, and I think that they can rebuild. Their entire management team is like recycled, essentially, or they've changed seats. The best thing that Unity still has going for them is the fact that they are like a duopoly, and they have that benefit in that space in general. But again, there's a lot of unknowns with the company, and so buyer beware in terms of buying it at these prices. The prices reflect the actual state of the business. Yeah, I think that's all I can say on Unity. A lot of execution risk.
Yeah, I'm staying away from both that and Celsius. It just, but it's a commodity. Unity should be a monopoly or duopoly. Maybe, yeah. It's just terrible management. It takes a while to turn around things. They'll probably be okay. I'd rather be another place that I have more conviction in.
Yeah, like again, I think my perspective has slightly changed as well. Where before I would just buy shares, and this is like a learning so that you don't make the same mistake. I would buy shares and then hold those bags and average down possibly. Where I still have shares of Unity that I have at like $50, $60, 65. I think my average is like, 40 something dollars because I was buying in the 20s. Right now, if I were blank slate, I would probably just go into it with leaps, honestly. So you capture some of that upside and knowing that, hey, that leap can go to zero. You got to be careful with that. It's not like a beginner thing. But at the same time, like if I think there's upside opportunity, but there's a high level of risk with that company, then I'm like, cool, let me go leaps. Similar to Celsius, similar to Enphase, similar to Unity. I don't want to hold them as positions long term, even Nubank, right? And I would just buy a leap on them because if Unity, which is super oversold by the market, can manage to fundamentally rewire their business to get profitability, to actually, start capitalizing, then that business can go from 20, it can go back to 60, back to 70, like in a heartbeat. And your leap is going to be an outsized reward. So as long as you understand the risks, I think the rewards are there for the reaping, more so than the shares, because you command a much smaller amount of capital in the form of leverage.
Yeah, fair enough.
Last question.
That was the last question, unless you have another one. I think we'll call it good there. Appreciate you guys asking the questions in the comments, interacting. We'll try to do that every time. If it's not like just a ridiculous amount of news, answering some of your questions. And, I'll be always shoot straight with you. So we'll tell this. If we don't know something, if we're uncertain about something, we'll say that. If you ask an opinion, I saw SoundHound. I'm like, I know very little about it, so I have no opinion on it. I'm happy to say that. I'd rather say that than just give you some baloney that I don't really believe. So we'll always shoot you straight. Thank you guys for tuning in. An hour and a half. A lot of you guys tuning in. Appreciate you, especially with us moving time down a bit. But yeah, any last words, Tevis?
No, thanks everybody. This has been a great show. Like and subscribe. I have Roy's channel pinned at the top of our chat. So go ahead and follow Roy. He makes way more videos than I do at this point because well, I don't have any excuses, but I will have another SoFi video coming out probably tonight, if not tonight, tomorrow morning. So stay tuned for that. And we will, of course, see you at the SoFi Weekly Show on Friday. Merv, you snooze, you lose, but luckily on the internet, everything is recorded, so you can play this back later on. Thanks, everybody. See you next time.